Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, 2nd of July. We are starting to see more data this week, and remember that tomorrow is Wednesday, early close, because Thursday, 4th of July, Independence Day, markets are closed. So today is a big day in which the markets are trying to push a little bit due to economic data being quite optimistic, because we got jobs openings way higher than expected, 7.9 million on the previous one, now 8.14. We were expecting flat reading, and more job openings mean that the labor market remains strong. At the same time, the quits are maintained, are not going lower, are not going higher. So basically the openings are a check in the right direction for the Fed. And Chair Powell's speech today basically was a little bit dovish. Data showed that openings unexpectedly increased, and Powell stated that there has been a substantial shift towards a more balanced labor market between supply and demand. Powell's comments this morning were more relevant to the direction of yields. The chair noted quite a bit of progress on the US inflation front. That's why he sounded more dovish than expected, and the risks are being characterized as more balanced as opposed to a skew towards the inflation side of the Fed's dual mandate. Remember that the Fed has two mandates. One is labor market going higher, labor market strength, and also inflation control. We are focused on inflation, but labor market not going down, being strong, it's also the second mandate. So in the dual mandate, we are getting good news. We are getting good data. Jerome Powell is acknowledging that the inflation is progressing, it's showing progress, but he's not prepared yet to cut rates. The discussion are still there. That's why we are seeing probabilities still showing, let me just refresh this, still showing 63%. We were like 50 something. Let me just show you the comparison in September. As you can see, we started with 47% in late May. We increased to mid-June to 59, and now we are reaching 63. So this increase in the probabilities and at the same time decrease in the hold is showing that the rate cut most probably is going to be in September. That being said, price action is king. You know that, right? So price action today showed during the overnight quite a little bit of choppiness. As always, Nvidia was really struggling, gapping down. Right now, it's not yet able to reclaim that gap. So each time that Nvidia is chopping, it's opening 2% in the red. Let me just show you how much Nvidia was down. It was at some point 2.56. So Nvidia going down and Nvidia being weak, sadly, it's what it is, and it's what's causing the market, the NQ, to really struggle. I'm saying struggle because during the overnight we were just trending lower, and into the open we just got that sparked to the upside, not without choppiness, but we were just doing business. I say doing business because basically we are taking liquidity. We are taking this pivot, and yesterday's high. Sorry. Yes, yesterday's high. So yesterday's high is basically, let me just put this in here, down here. Okay, prior high was the main focus today. And if you check the 1 minute, look at this. Actually, let me just, I don't know why it went down, but this was my trade. 1-to-1, basically 1.17. I was not super bullish. I was not willing to risk more than that. And it paid directly. Look at this. It just went since the take out into the liquidity, and then chop, 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 chop. So let me just tell you, obviously this market is going higher, but seeing this price action, do you think that Nasdaq and stocks are strong, or are they just emotionally going higher due to excessive optimism? My opinion is that Nvidia is still showing weakness. We have banks and mix to green. Basically, small caps are flat, dollar is flat, yields are going higher, and the inverted yield curve keeps pushing. Yesterday, I told you about this. We are still there, pushing a little bit higher. So I'm being very cautious because I still think that this market is not prepared to take these two warning signs. I don't think we are going to skyrocket there. If it happens, welcome. Anything can happen, but my bias is not that bullish. I was bullish today just to repair some business. Notice that I have this week tracked on the 50% retracement. 50% retracement would be 20,210. That might be some kind of target. I think we can also take this as a possible pivot. I mean, market is just going straight into some emotionally FOMO and hype. Tesla is 8.75% due to basically outdoing the expectations on quarterly production. So basically Tesla pushing all these doubters that are saying that Tesla is not able to manage production. It is, but the rest of the market 1.17. Look at this double top on Apple. Apple double topping on the daily. It's pretty scary. Microsoft pushing, but look at how it does. It starts to chop, sell off into, this is, I told you a couple of times, this is algo buying. Look at this. When we are doing this, this is an algo buying. HFT into a buy. Microsoft, for some people, it's still a buy. I think we are quite overextended. Look at these 20 moving average. Look at these 45 moving average. It's not pulling back. I don't think anything has changed in these days to really, in this week, in this start of the month, to really justify this. Amazon 1.34 also double topping. We are at critical levels doing things like this. I mean, I'm just telling you, be cautious. Don't get me wrong. I want to buy this market, but I just don't feel this is correct. Maybe it's because my experience, I don't think stars are aligned to do these kind of things. As you can see, this is super choppy. This is also algorithm or some, I don't know what is happening, but obviously today Jolts was good. Powell sounded dovish. Markets are pushing due to, I don't know why, September cuts. I don't know. Let's just follow price action, and I'm just going to throw away my bias and analyze this market. Basically, if we close above this pivot and more than that, above this 50% retracement of the 1 hour week that we formed last Friday, I'm going to turn bullish again. But the way we are moving, the way the Nasdaq is behaving, and the Magnificent Seven and dollar, gold in the green, treasuries, yields going lower, small caps. Let me just show you this. Small caps are ticking lower in all three indications of momentum, trend, and long term. So small caps are not going with this push. Nvidia is neither going with this push. Tesla is pushing. Apple, it's in a pretty critical stop, the same as spot as Microsoft, Amazon, they are all at all-time highs. They are there trying to squeeze even more. And when we are so bullish that we stop trading risk and we just FOMO and buy blindly, this is when things get crazy to the downside. And when you don't expect the market going down because you think everything it's right, then it's when it tumbles and it really crashes. So as I said, don't get me wrong, I would like to be bullish. My levels are, we need to close above this 20,178. If we close even more than that in this way, above the 50% retracement of the 1 hour, then I would be even more bullish, because I think this is a retest into a squeeze, and I would buy the momentum squeeze into all-time highs, which is, by the way, 20,371, which was done outside of regular trading hours. This was the retest of regular trading hours all-time highs. This was done during the overnight. Markets don't like that. But this candle is major. It was on Friday. We are trying to squeeze that. Let's see what happens. Let's see what happens. We are struggling there at this pivot. We are struggling at this pivot. The next is going to be here with a fair value gap in here. I mean, it looks decent because we pushed, we pull back into the inverse, and then we are squishing. But I want to see institutional order flow with strength into the close. Anything can happen. I just want to see the close today. Tomorrow, it's early close. Thursday, it's just off the table. And Friday is non-farm payrolls. Do you think we are going to increase huge open interest in futures just to have 2 days of barely no volume on trading? I just want to see the close. And let's see what happens. So your job, your work for tomorrow is just to be patient, to see how the market behaves at these levels, because we can either squeeze or just pull back a lot and destroy all the people's FOMO, hype, and all that around. So I'm going to just be patient, be disciplined, and watch the market. I need to react to those levels, and for me, this zone is critical. So we have two options. Either we pull back and we turn bearish, or we push, and tomorrow we are going to most probably squeeze. Let's see what happens with an early close tomorrow. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Remember that the trading day is not over. We need to see how the market and the price action establishes at these levels. We have time tomorrow to take some action, but I really doubt tomorrow and Friday we are going to see huge moves. Maybe on Friday, but who knows? But ahead of tomorrow and Independence Day on Thursday, I don't want to risk it. So be really careful in these markets. Don't lose to FOMO. That's the most insane thing to do. Trust me, I did it, and you need to be patient. You need to be disciplined, and you need to manage your risk and your emotions to really trade the market that you are in. And right now, I think we are in a pretty dangerous zone. This is the danger zone. Be careful. I will be watching here for tomorrow, and let's see what happens. Stay safe, everyone, and see you tomorrow.